Hi, welcome to the Market Alert for Monday, the 7th of August 2023. So the NFP numbers was less jobs, more inflation, stocks puke, oil soars, and the yield curve steepens. Stocks worst week since March of this year, so a reality check for the markets, as it says there. Slowing jobs growth catalyses bond recovery while Apple sinks stock market. So I don't know what happened there. Let's just have a look. Rear view, mixed jobs reports, headline short of expectations, unemployment surprisingly falls, earnings rise, strong German factory orders, OPEC and JMMC recommends to change in output. Strong Amazon report, Apple revenues decline year on year with iPhone and iPad sales light. So that was the reason for the puking later on in the session then. Economic news, let's have a look, see what we've got. There's nothing really for the next 2 days. And same for Wednesday, actually, the next three. So Thursday is where your focus is going to have to be with the news. We've got the US CPI, or CPI, as it's called. So it'll be interesting, won't it, when you've got the headlines there with more inflation and stocks puking, and also there. And then you look at these ridiculous numbers here for the year-on-year 3%. Utter joke. Absolute and utter joke. Fraudulent is an understatement for these numbers. I mean, there's no way inflation is running at that level. So anyway, rant over. FOMC Harker speaking as well on Wednesday, but nothing really for the week. That's the biggie. The CPI out on Thursday at 1:30 p.m. Okay, let's have a look at the markets and see what happened during Friday then, following the NFP numbers. So as we can see here, the market down. It started off quite well, actually. If we look at the 30-minute chart, market moving up nicely there. We've got the NFP numbers in there. And then later on with Apple and Amazon, whether it's an excuse or not, I do not know. But the market tanked. And prices then recover overnight at the moment. They need to get back above the DP, the 50 EMA, to attack at least the R1 and Friday's high. The low and the close, obviously a bit closer for attack if the market wants to move lower there. And in the German DAX, similar picture. We've been down for 3-4 days now and finding a bit of support at the 62% retracement there. Needs to close above the 5 to head back to the upside. It'll be interesting to see if it's got the momentum to do this during today. So we'll mark up the upside. We've got targets on the downside. Obviously the low of Friday is going to be the first one. Look at this in more detail in the 30-minute chart. Choppy start again for the DAX. It's been the same picture for a while. We then sold off mid-morning, and then we've seen prices move back on the afternoon, following the non-farm payroll numbers, and then we sold off in the evening with the Dow back to the close. At the moment we're above the DP, showing a bit more strength than the Dow at the moment. 5 minutes overnight sideways there above the DP, and then on Friday we'll just have a look at a bit more detail of this market. You can see the sell-off there in the evening, and as we move across you can see the market's reaction as well to the NFP numbers, the spike up and down there. But the kickoff of the session was interesting because the market, as it's done for the last few weeks, sold off and then rebounded and then struggled with the close and the DP, and then sold off mid-morning until we had the NFP numbers, which came out there, and then the market moving up with the Dow and then down in the evening. So where we are currently is the market's above the DP and stuck in a bit of a sideways range there. And in the S&P, also retracing back to 50-62% area. Market trying to get back above the 5 MA. 30-minute chart, we move lower, and then we had the kickoff at 2:30, and then news, and then eventually moving down again like the Dow, below the DP at the moment. The close and the low were closer than the high at the moment. In the FTSE 100, finding a bit of support with a lower high on Friday. And in the 30-minute chart, you can see the market rebounding quite strongly, creating or trading to the high of the previous day. We've got the high up here for today, and we're above the DP at the moment as well. So the FTSE looking quite good, apart from the electronic market where prices came down, which you can see there during the evening on the electronic session. In the US dollar, down on Friday, didn't help the metals though. They still came under fire and will do for a while, particularly if interest rates are going to continue to move to the upside. You can also see there that we're up on the overnight in the dollar as well. So let's have a look at the metals. Starting off with silver, as I said, we go to the 200 MA. When I'm revising this, we're going down to 89, and we could attack all of these on the downside now as well, with the prospect of interest rates having to move back to the upside. So silver coming under a lot of pressure once more. There you can see the reaction to the news, which was good, but the Asian market, they're already slamming the price. The low will be taken out at 23.19 either this morning or at 1:30 when the LBMA creates the spot price. Gold also down at the 200 MA, holding up a bit better there. And at the 30-minute in gold, you can see the market's reaction to that inflation prospect, or returning inflation. It's never gone away, but that's what they're phrasing it at. Market sideways, but down to the DP overnight, so holding up a bit stronger than the silver market, which, as you can see in the gold-silver ratio, is continuing to move to the upside. Looks like we might be going back up to 86, which means that we'll be seeing the silver price continue to be crushed by the manipulators once more. Okay, that's it for this one. Like I say, no news today or tomorrow, or Wednesday really, to write home about. So the market is going to make its own direction and hopefully move. That's all we want. Okay, that's it for this one. As ever, thanks for watching. See you in the next.